Time to check in with the host of Sky News Business Now, which will follow afternoon agenda. Our business editor, Ross Greenwood. Ross, while the government keeps saying things are tough, the books seem to be saying something quite different right now.
It's quite interesting. This is coming out of the Department of Finance, and I heard Katie Gallagher this morning on with Pete Stefanovic, basically saying about the tough headwinds ahead and the tough measures that will have to be taken in future budgets about spending. And certainly there's plenty of storm clouds out there, but when you look at the actual numbers coming out from the Department of Finance, and I can show you the May numbers, they tell a thoroughly and utterly different story. So here you go into May. These numbers came out late Friday. So in May, the budget balance, the cash balance, was actually in surplus, not in deficit. So in other words, the country made a profit in May. Now, this is as a result of very full employment and obviously the royalties and the money, the taxes that are coming through from iron ore mining and from coal mining as well. But if you look at even the year to date so far, the budget said that the deficit to the year to date to the end of May would be $63.7 billion. You can see there it's $34.6 billion a deficit. So that's $29 billion difference. So if we go further forward, what that impacts is obviously the debts of Australia, because clearly if you're not losing money, you're making money, so you're not going further into debt. So if we go to the national net debt, this isn't the gross debt. They talk about the $1 trillion worth of debt. This is including the assets that Australia's got. So in May, just gone, $516 billion. And the forecast for the full year at the end of this month that we're currently in, just about to end, June, the budget forecast was for $631 billion. Now, if we remain in that surplus we're in last month, and there's every evidence that we will, that debt is going to be closer to $500 billion, so some $130 billion better than what was previously expected. So my point here, Kieran, is despite all the doom and gloom talk around the place, the budget is significantly better than what had ever been forecast.
Yeah, that's a very interesting point, particularly when the first budget's looming, not that far, an economic statement at the end of next month, July, budget coming in October, and they're saying they want to fix the books. So, Ross, it looks like, at least in that sense, they're well on the way and helped by those commodity prices.
100%. The books are being almost fixed by themselves. Now, to be honest, it's really important that people stay in their jobs, because more than half of the money the government receives comes from employees and their PAYG wages. So that's a really important element of it. Now, if that changes as a result of higher interest rates and inflation, well, fundamentally you've got some problems. Of course, the other telltale sign is going to be property prices, Kieran, as well.
Indeed. And on that, there is a small hint that things are really slowing up as we speak, Ross. Auction clearance rates at the weekend, they're as weak as we've seen in a number of years.
Yeah, so this is where the problems start to lie. If all of a sudden household wealth and household spending start to slow down, then some of those sectors that are the big employers, mainly retail, are going to potentially look twice at whether they need to hire more workers. And that's where you start to have some economic problems going 12 months down the track. So in this particular case, the auction clearance rates in Sydney, say, for example, were less than 50%. And so you suddenly realise that half of those properties that went on the market or roundabout over the weekend are still on the market now. In Melbourne, I think it was 61% clearance rate. In Brisbane also, around about that 50% mark as well. So in all these cases, what that means is that there's now an overhang of property on the property markets that need to be cleared, where potentially prices have to be cut to get them sold. And that, if you like, is the flow and effect of higher interest rates and potentially lower housing prices around the country.
Ross Greenwood, thank you. We'll check out the Business Now at 4:30 p.m. right after afternoon agenda. Thank you as always.